Well, hello everybody, welcome back. And today we are going to discuss bad patterns on pound dollar. I'll do some historical research work and you will see the accuracy of this pattern, how many losers we have in a row, how many winners we have in a row, what is the overall probability of success, and so on and so forth. In front of your eyes, I will be looking for some setups that meet my rules. Well, I do it absolutely objectively because I have created a software that draws bad patterns for me. I don't need to look for some patterns, don't need to stretch Fibonacci's, don't need to measure swing lows, swing highs, and so on and so forth. No need to draw anything because the software draws by itself, on itself. I don't know what is the correct. Okay, well, before we start, you need to know the rules for bad patterns, and the fastest way to know those rules is to go to my website and just click that Learn the Patterns tab, and you will find bad advanced formation rules. Here it is. Okay, if you don't want this way, you can go and surf the internet for bad advanced pattern formation rules. Just type it in Google search box. You'll have plenty of websites that will only uncover some part of the truth, and the rest of that truth will be covered, and you will be suggested to take a training course. So on my website, every information is absolutely free. You don't need to pay for anything, because I suppose that knowing the rules is not very important. The more important what you will do with those rules, how you will use those rules in your trading, or will you ever use them. Okay, let's go then to our charts. There are four main mistakes in advanced pattern formations. I suppose that you know the rules, so I will only enumerate the mistakes that advanced pattern traders do. Mistake number one, they look for patterns that contain more than one swing in XA, AB, and BC legs. This is not correct. Only one leg should be, only one swing should be in one leg. The CD leg is not important. XA, AB, and BC legs, the first three. Second, advanced pattern traders don't adjust the targets when the entry is triggered. They don't adjust their targets, and they leave the initial targets as they were. So this radically decreases the accuracy of the pattern, and the pattern turns into negative expectancy. The whole strategy requires negative expectancy. Another mistake is so-called 90% rule. I call it this way, 90% rule. When the last leg of CD is completed, 90% rule, and then the reaction started and hit the take profit. So many traders cannot agree with that missed opportunity, so they are waiting until price retest the entry level, and they want to enter and play this pattern. But all major players already played this pattern a bit earlier, so that's why the retest of that entry at the retest is not a very good idea, because the reaction already happened. And mistake number 4 is trading fixed fractional money management strategies. Because of target adjustments, you are making your take profits a bit lower than the initial ones. So you first set your take profit as, let's say, 1% and your stop loss as 1%, 1-to-1 risk to reward. And when you adjust your targets, you consistently make your take profit smaller, 0.9, 0.8, 0.7, and so on and so forth. So you consistently make your risk to reward negative. It is better to trade fixed lot size. So if you have a loser, let's say of 10 pips, then on next trade maybe it will be a bit larger formation. Even adjusted target can be 20 pips. So your targets should be covered with your losses should be covered with your targets. Okay, and there are some psychological mistakes as well. I will just mention one of them. This psychological mistake is called avoiding losses. It is very important to understand that whatever strategy you take, even it is the best strategy in the world, let's say 99% correct, it has that 1% that is losing. 1% you have a chance to lose. So you are to accept that the strategy has both winners and losers. And without those losers, the strategy won't work. Without the losers, it has both winners and losers. When you try to avoid losers, applying some filters that you didn't test, applying some, I don't know, rules, rumors, I don't know, FOMC statements or whatever, when you try to filter your trades, try to do your strategy even more accurate to avoid losses, you can damage it. You should first backtest your rules. This is, let's say, rule of trading number 1. Because nobody does this, everybody wants to have some guarantees that this particular trade will be a winner. They take this, I don't know, Gartley formation, then they say it in lines with trend line, overall trend. It is good with RSI conditions. They will also have some pin bar in that zone, and we also have some MACD cross, and we also have something, I don't know, upper Bollinger Band, and all this lines up, and the trader makes decision to bet all in. But he doesn't even realize maybe those Bollinger Bands, RSI conditions, maybe those pin bars play negative roles for his strategy. Maybe if he didn't use them, he would have a better accuracy. He needs to test them before he trades. So applying filters, you can avoid losses as well as avoid winners. You have to backtest what you are avoiding. If you want to avoid losses, you need to backtest that and know for sure that you avoid more losses than winners. Okay, as I told you, medium bet patterns. Medium size, not large swings. Okay, set it to medium. History mode should be true. Gartley formation false. Bet formation true. Cipher formation false. Butterfly formation true. I will explain the setups, so you will also have a training on advanced pattern formation, especially the bet pattern. Let's go home. I'm going deep into history. July 14. Okay guys, let me do it this way. Go to History Center. We have 1 hour open. 1 hour chart is open. Where is pound dollar? GBP, CAD, OZ, GBPUSD 1 hour chart. It now has 16,000 bars, and I want them to have, I don't know, million bars, 100,000 bars. 16,000 bars is not enough. Okay, now we have 1,000 bars. The history. The first January 2001, not January 2014. Okay, let me reload my MetaTrader. Going back to refresh the latest quotes. Okay, done. Let me do it once again. Pattern Search Pro, medium. Go into history mode. True. Gartley false. Bet true. Cipher false. Butterfly false. Okay, everything is correct. Now it is drawing. Let's go. We have this. What happened here? We violated C point. Go in here. Violated nothing. It is still valid. Let me draw it this way. It was a winner. Hit 382. Let me type it down. Okay, done. Another winner, obviously. I'll do it different way. Okay, obvious loser. Page by page. Don't be in a hurry. Look what happened here. We triggered the trade and then we went to the upside. This spikes to the upside after this candle. So we hit the take profit. Okay, going next. Nothing triggered here. Nothing on the first, and the second is obvious loser. Nothing here. Violated C. Violated C. Okay, violated C. Okay, and here is a win, I suppose. We first started the reaction from here and we hit targets. Yes, we hit targets. So this is called 90% rule. The leg was completed 90%, the first, and then it went to target level. So stay away from this trade. Missed this opportunity. Okay, what is this? Violated C point, I suppose. Yes, it is violated C point. So this is the rule. Some of you would say, okay, the bet pattern is valid until it goes deeper than A point. I say no. If you have a new C point that is lower than the previous C point, what you will have in this BC leg then? You will have several swings. Agree? So when you have the C point lower than the previous C point, this is called violated C, and that's why the pattern is invalid. Only one swing, AB, BC, and XA. Nothing here. Nothing here. Going next. Let me zoom it in a bit more. No C point violation, and we hit 90% and went to targets. So after that we didn't enter. Although price went back and hit the entry, look what happened, it went to stop loss. No trade here. Violated C. This was a potential winner. Yes, it hit targets. You can also write it down with me, so to make sure that I'm writing the correct things. Violated C here, violated C first, and the second hit 90 and went to the upside. Yes, sometimes the reaction starts earlier and there is no need to re-enter the trade on at retest. So you see, again started earlier. No trade, no trade. Okay. The bull pattern was invalidated, so the bear pattern is only valid here, and it was a winner. Obviously, we didn't hit the stop loss. Going next, we have the first bull pattern violated C, spiked it to the upside, and the second pattern we hit 90%, and then we went and didn't hit the target, so it was valid. Then we went to hit the entry this way. We had some small reaction but not enough to hit 382. That's why it is a loser. Going next, don't be in a hurry. It looks like a loser, but you need to check everything. The first spike that triggered the trade was here, yes, and then we had some spikes to the downside, not enough to hit the 382 take profit, so it was a loser. Going next, violated C. Okay, earlier reaction, yes, reaction was early. Going next, nothing, violated C. Okay, bull pattern was violated, bear pattern needs to be examined. We had these spikes, then we had higher, higher and higher, and this reaction was not enough to hit 382 target, so this is a stop loss. Violated C. Okay, pure stop loss. Obvious winner on this one. 382 was hit. Okay, going next, hit 90%, then went downside and didn't hit the target level, so the trade was triggered. Going higher, not enough to hit 382, so this one was a loser. Let us examine the second. We first went here, we didn't hit 90 and then went to the upside to target level. This is not 90% rule. Okay, and then we had a loser. Going next, let me see if we triggered the trade. No, the trade didn't trigger. Didn't trigger here, violated C. Bull pattern is invalid, and the bear pattern goes this way. Okay, triggered, and then it hits stop. Nice. Going next, another, not yet. Look at this. We first went here to the upside. Oh, we didn't complete 90 and then went to targets, so this is not invalid pattern, this was a valid one, and we hit stop loss. Going next, obvious winner here, no need to measure, but I still will do that measurement. Didn't hit targets and then we went to the upside. Oh, didn't hit stop loss. And then we hit targets. Okay, what was this? Wonderful sideways movement. Violated C point. You can see this. Violated C. So it's not correct to have it this way, because we will have 1, 2, 3 swings in one leg. If it went this way, then it was violated. Same situation here, violated C. Same situation here, same, nothing. Okay, this looks valid, and we go to the upside. We don't hit those stop losses and went to the downside. This is a winner. What is the next one? It was violated to the downside. Violated, nothing. Okay, hit the entry, hit the take profit. It was a winner. Okay, violated. Wonderful. What we have here? Lower than the entry, we stood away. Went without us. Okay, nothing here. Nothing here as well. Okay, nothing. Okay, nothing on small pattern, and a larger one needs to be examined. Didn't hit that. Okay, we hit 382. Going next. Violated. Violated again. This is obvious stop loss. Okay, violated. Hit 90%, then went to targets, and we didn't hit targets. We didn't hit that. It was a stop loss. The first one stop loss, and the second one hit 90%, went to targets. Yes, it hit targets. Oh, it was violated before that. No trade. Okay, missed that. It went earlier, didn't trigger. Violated C, and this one is a loser. So what do we have? 24 trades. Okay, now we have 25. 10 of them were winners and 15 losers. Okay, the second bet is violated. Potential winner here needs to be examined. Yes, we hit 382. Going next. A winner, obviously. Went to entry, then we went to targets. The bull pattern was violated, bearish was violated, nothing here. Obvious winner. Going next, triggered a bit earlier or not? Let's measure that. Needs to be examined closer, a bit earlier. So we didn't enter this. Didn't trigger this one. We didn't hit 90, so it stays valid, and then we hit the entry and hit the target, so we have another winner. Okay, the first one, the small bearish pattern, was obvious stop loss, and the second pattern was 95,663, 95,660 winner. The second was triggered. So we have negative and positive. Going next, another winner, obviously violated, okay, violated. It's not seen clearly. Let's zoom it in. No, it wasn't violated. So the pattern was triggered. Here we went to the upside and hit targets. It is a loser. Going next. Violated C. Nothing here. Violated C. Violated C as well. You can see it was violated. Violated C again. Okay, loser or nothing. It was a loser. We didn't hit targets. Going next. 2007 already, 7 years passed. Okay, higher than the entry, so we were triggered and hit the target level. Going next. 90%. So very often the reaction starts somewhere around 90%. Okay, obvious loser. Winner, obviously. Bearish pattern invalidated. Bullish. Let us see what happened to that bullish pattern. Lower than 90. Sorry, not lower. Higher than 90. 90%, then we went high here. 96,990. 96,989. So this bull candle hit the targets, but we didn't enter. It was 90% and then it hit the targets. So stay away from this, and we only have this loser. Bit to the downside, violated C point. Okay, another violation. What was here needs to be examined. We triggered, went here, then we went here, and then we went here, and it was a stop loss. Okay, another examination. We went here, didn't trigger the target. We went here and we didn't reach the target level, and it was a stop loss as well. Okay, obvious winner. Obvious loser. Obvious loser. %90 hit and then hit the target, so stay away from this bearish, and that bullish was violated. Let us say if we've been triggered here. Needs to be examined. No, lower, so we were out of this trade. We stood away. Okay, bullish small didn't trigger, bearish first one violated, bullish second violated. No trades here. The first bearish hit the targets, obviously. You can see that it hit 382, and the second bearish bullish didn't trigger. Only one winner, nothing else. this one violated C. Going next, obvious loser. So the strategy has both winners and losers. We hit 90%, so we stay away from this trade. We hit 90 as well. Let me measure that. 44, 29, 6, 44, 30. Yes, we hit 90%. Then we went to the downside to hit targets. No, we didn't hit targets, so this was a loser. Okay, didn't trigger. Bearish was a stop loss and bullish was a take profit. So stop loss, take profit. Okay, violated C, I suppose. Yes, the C point was violated. Obvious winner. Obvious winner once again. Another 25 trades is done. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 winners. More than half. Going next. What was this? We had some reaction to the downside. Was that enough to hit targets or not? From here to here, yes, it was enough. It was a winner. 51st trade was a winner. Okay, violated C. Let's measure this one. 90% away from this trade. Violated C. Okay, hit this and we didn't hit. Okay, we hit targets. If you cannot see it well, we hit 90%, then we went here to hit targets. You see, we stay away from this and we stay away from the second. Okay, going next. Hit 90% and then we went to the downside. We didn't hit targets here, then we went higher. Potentially we could trigger this trade. Yes, the trade was triggered. You see, the line is higher, and then we went to targets. This was a winner. Okay, violated C point. Violated C point. These workouts are very useful. You train your eyes, you drill the rules again and again. Violated C, 90%, blah blah blah. You drill the rules. Okay, nothing here, and we went to stop loss. This one was a loser. Going next, a loser here as well. Maybe pound dollar 1 hour is not the best pair for trading bets. Maybe you just need to stay away from this pair. Who knows? Okay, obvious winner here. Nothing here. Didn't trigger, I suppose. Didn't hit the entry. Yes, lower. The reaction starts slower on pound dollar. In most cases, obvious winner. Obvious winner. Okay, violated pattern. Obvious winner. You can see that it started to the upside. Let me stretch the fibs. 382 and even 50 was hit. Going next, potential winner here as well. Yes, we hit 382. Going next, potential winner here as well. but needs to be measured. Oh no, it wasn't winner. This reaction to the downside, this spike and that second spike was not enough, and then we hit stop loss. It was a loser. Okay, violated the second pattern, obvious loser. Violated C point, going next, violated C point. We didn't hit any targets here, it was a loser. Okay, violated C, 2011. Obvious winner, hit entry and then went to hit targets. Hit 90%? No, we didn't. We hit 90% a bit lower. Let me show you. And we didn't hit entry. So, stay away from this. Obvious winner. No doubts. Nothing, violated C point. Okay, nothing here because we hit 90 and then went to targets. Stay away from this. Obvious loser. Going next, violated C point. We didn't hit 90 here, so this is not an invalidation movement. Then we went to hit the entry and went to targets. Going next, this was a winner. Okay, obvious loser. Violated C point. Violated C. Obvious winner. We didn't hit the take profit. Okay, measure this one, potential winner here. No, we didn't hit the 382, so it was a loser. Violated C, violated C, and violated C. Stay away from this. We hit 90%, then we went to targets. Violated C. Obvious winner, I suppose. Yes, we didn't hit the stop loss. Okay, going next. Nothing. Potential winner here. Yes, we hit 382. Going next. Violated C point. Going next. Hit 90%. Well, yes, if we didn't hit 90% here, we obviously hit it here and then we went to target, so no need to check it. Stay away. Violated C. Okay, we triggered the trade. Obvious winner in front of your eyes. Went here, then we went higher. Let me zoom it in. The first reaction was here. We started the movement from 90%, then we went higher and we didn't hit the target level. So on the second reaction we have 382 hit and we were in. Winner. Okay, violated second pattern. Violated the first. What is this? This was a winner. If we stretch it this way, yes, 382, a winner. Okay, violated C point. What was this? We didn't hit the stop loss, so it was a winner, another winner. Well, 25 trades more. Let's calculate. 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 out of 25. Total we have 75 total. Going next. The first one was a winner. The second one didn't trigger, violated C. The third one went to 90 and hit take profit, so only the first one is valid and it was a winner. Okay, violated C, violated C, violated C, violated C, violated C. We didn't violate here. Let's examine this trade. We do not trigger stop loss, so we go to take profits, obviously. Going next. What is this? Nothing, I suppose. We didn't trigger the the entry. Going next. 90% hit, didn't trigger. The second did trigger. Didn't touch the stop loss, so it was a winner. Okay, nothing here. Didn't trigger. This one was a loser. I mean this one. Going next. Violated C. Violated C. A winner, I suppose. Hit 90%, then we reacted to the upside hitting the target, so we stay away. No trade according to the rules. Hit 90, went to targets, no trade here as well. Violated C. Did we hit the entry? Well, it's a good question. 42,990, 42,989. Yes, we hit the entry. 89 is lower than 90. Going next, obvious winner. Boom, reacted to the downside. Going next, the first one is a loser, the second is violated. We have a winner here. You see, triggered the entry, went to the downside. Going next, didn't trigger the pattern. The trade, second one, is didn't trigger as well. Okay, obvious loser here. Straight to stop loss. Violated C. 2016 February. Okay, I suppose we violated C point here, violated C of bearish pattern, violated C of bullish pattern, and that's it. Let's calculate what we have here. 1 2 3 4 5 6 more winners. Total we have 75, 76, 77, 78, 79, 80, 81, 82, 83, 84. Total trades, let me type it here, total 84. Winners, let me calculate that. Had 10, then we had 13, then we had 17, and then we have 6. 46 winners. Okay, losers, let's calculate losers. It equals winners minus this. We have 38, and the overall accuracy of medium bets on 1 hour looks this way. We need to divide winners by total amount. Okay, percentage, boom and boom. The total accuracy is 54.76, almost 55%. So bet patterns on pound dollar, 54.76. Well, not the best pair for bet patterns. I had some other pairs having about 70% accuracy, having about 60% accuracy. This one is not the best, but this pair is enough for generating money. Well, it should be in your portfolio for trading bet patterns. Why do I say so? Because just calculate what you need to stay break even. You need to have 50% to stay break even, but you lose money paying spread to your broker, yes? Then you lose money paying swaps, and then you lose money paying commissions. So you had 50%, so you need 1% to pay spreads for broker to your broker. You need another percent to pay swaps to your broker, and you need another percent to pay commissions to your broker. So overall you should be 53% to stay break even. Everything above this accuracy will generate money for you. Everything that is lower than this accuracy will be losing money, will be generating losses. So keep this in mind. You should only trade those strategies that are 53% accurate. Okay guys, hope you liked that video. If so, give me your thumbs ups, share this video on social media. Well, follow me here, subscribe to my next videos. Until then, good luck, good trading, hope to see you soon.